Hi. Let's learn about Banker's Acceptance, BA. Banker's Acceptance is a negotiable piece of paper that functions like a post-dated check, guaranteed by a bank. Companies use BAs as a safe form of payment for large transactions, and they can also be short-term debt instruments that trade at a discount in the money markets. A banker's acceptance is a way for a company to pay for a purchase without borrowing. It requires the bank to pay the holder a set amount of money on a set date. They are most commonly issued 90 days before the date of maturity and can be traded like bonds in the secondary money market. Bankers' acceptances have been around since the 12th century and were used as a method of facilitating trade. In the 18th and 19th centuries, BA started to become an actively traded market in London. The US launched the Federal Reserve in the early 1900s to help create BAs that compete with London's. Bankers' acceptances, like certified checks, are a relatively safe form of payment for both sides of a transaction. They are most commonly used in international trade transactions, where the buyer can issue a BA with a date after a shipment is due to be delivered, guaranteeing payment to the seller. Banks and institutional investors trade bankers' acceptances on the secondary market before they reach maturity, selling them below face value. They are considered relatively safe investments because the bank and the borrower are liable for the amount that is due when the instrument matures. A key advantage of bankers' acceptances is that they are backed by a financial institution, giving assurance to both the seller and the buyer. The key risk is that the financial institution will have to make good on the promised payment, which is a risk for the bank. For a banker's acceptance, the importer seeks to make a purchase from an exporter, generally in another country. The exporter wants assurance of payment, and the importer wants assurance that the seller can deliver. Banker's acceptance is a form of payment backed by a bank that eliminates transaction-related risks for both parties. Bankers' acceptances are money market instruments and, like most money markets, are relatively safe and liquid, particularly when the paying bank enjoys a strong credit rating. The banker's acceptance rate is the market rate at which these instruments trade. It's the return an investor would receive if they purchased today and held until the payment date. Commercial paper is a promissory note that pays a fixed rate, unsecured, and generally used to cover short-term obligations. BAs are also short-term promissory notes, although they have the unconditional guarantee of a bank and are often used for trade. Here are 4 key takeaways. 1. The banker's acceptance is a form of payment that is guaranteed by a bank rather than an individual account holder. 2. BAs are most frequently used in international trade to finalize transactions with relatively little risk to either party. 3. Bankers' acceptances are traded at a discount in the secondary money markets. 4. Thus, unlike a post-dated check, BAs can be investments that are traded, generally at a discounted price. Hope this would help. Thanks for watching.